Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look at the gold market. And guys, as you can see, the reaction on the non-farm payrolls release on Friday was a bit shy, so the market has turned to the downside, but this was really not a very fast and furious action. Just market has just bounced down from this significant resistance area. And situation is not really simple right now in the gold market, but there are some moments that have happened on the previous week. We could discuss right now. First of all, take a look at this frosting action, this one and that one, and the analysis of the recent CFTC data mostly shows the significant drop in the open interest with a simultaneous shy increasing of the net long position. What does it mean? The open interest is just the total number of opening positions, open contracts on the futures markets, despite the direction of these contracts, either shorts or long, but all contracts create the open interest numbers. When the open interest decreases, it means that market participants contract their positions. And depending on what is happening with the short positions and long position, you can understand what really has happened. Either longs have been closed or shorts have been closed, or both of them, depending on how the net position has changed. So the recent data on the CFTC numbers shows that open interest has dropped significantly, and simultaneously the short position has dropped also. Now I'm speaking on the speculative positions, the non-commercials. It means that there were no real purchases, no long positions have been opened, but just short positions have been closed. And usually this leads to very short-term reaction, because no investing has happened, just the closing of the positions, and that has led to the action here, to the upside here and here. Another closing of the shorts hardly will follow, because right now open interest stands very close to the lows that have been formed within the recent 6 years. That's why it's hardly new closing of some positions will happen. And we suggest that maybe when the market wasn't able to pass through the significant lows at 1140 area, investors have decided to contract the gold positions, because currently we stand very close to the end of the financial year. The end of the financial year is the period when the mutual funds, when different hedge funds, traders calculates the final asset value at the end of the year. And this leads to the calculation of the bonuses on the premiums and so on. That's why when the investors have seen that hardly something drastic will happen in the nearest future, and hardly market will be able to break through the significant resistance in December, they have closed the shorts that they have opened with the hope that this breakout will happen. When it hasn't happened, they have started to close the shorts positions. That's our conclusion, because right now we do not see any other reasons or any other information that could tell us why this really has happened. We do not see any significant shifts in the geopolicy. We do not see any significant shifts in the economies. Even more, the better than expected non-farm payrolls data suggest the sooner tightening policy from the Fed, and since we have still anemic inflation data from the CPI and the PPI, probably suggest that this will be mostly negative for the gold market. That's why, as we did not see any real inflow on the money, we don't see any real purchases, and this idea is supported by the data from the SPDR fund. Recent statistics suggest that within the months, the fund has lost approximately 1% of their storage assets, approximately the 7 tons. But the gold in the recent months, you can see, has shown the rally approximately for almost $100 to the upside. It's a bit smaller, but still very significant action. That's why currently it's very difficult to make the decision on taking the long position here. And from the technical picture, we would say that we could start to think about the taking longs only if market will take out of the recent tops at 1220 area. So if market will exceed and continue to move high above this top, in this case the sentiment could shift, because right now on the weekly chart we have side by side two bearish grabbers that suggest the taking out of these lows. Right now market stands at confluence, resistance and agreement, so you can see market has completed ABCD pattern right at the confluence resistance on the daily time frame chart. And in fact here we have got this triple to sell pattern. This is also the monthly pivot resistance one area. And if market will return it back up, taken out of this top and hold there, this will break all bearish patterns that we have right now. Market will pass through the significant resistance, market will pass above the monthly pivot resistance, market will erase the grabbers on the weekly chart. That will be really significant. That's why we will not speak about long entry or bullish sentiment until market will not taken out the 1220 tops, until market will not erase the bearish setup that we have right now. That's why currently it makes sense to think either about taking the shorts or do nothing. What advantages of the short position here, besides the factors that we have just discussed, besides these patterns, another interesting moment is that market stands very close to the invalidation point, because here is in fact the invalidation point of the short-term setup. And that makes attractive the possible action to the downside, so market will really continue to move lower. That's the minimum target. But it's very probable the market will continue to move lower. And market stands relatively close to the current area. In fact, guys, another analysis tool that we could apply here is the classical analysis. So you can see this long candle is closing of shorts on the previous week. And usually when the market creates such sort of the candles, these candles very often holds the further action inside of this candle, inside of itself, for the considerable period of time. So I will not be surprised if market will turn to some calling inside the range of this candle. And but still the conclusion will be the same, that depending on the direction breakout, market will choose the further action. So if market will taken out of the top of this candle, then probably action will happen to the upside. If market will break it to the downside, taken out of these lows, then action will follow to the low, to the downside. Also, guys, maybe we should not expect some significant information from the Fed on the December 17th, on the next meeting, because Fed also understand that this is the ending of the financial year. Hardly they will apply some drastic rhetoric to speak on the possible rate hike, and probably their speech will be flat and just will repeat moments that already have been announced on the previous meetings. Maybe investors anticipate this, and they are just preparing for the long holidays and the closing of the year. That's why the activity on the gold market could reduce significantly. On the intraday charts, on the 4-hour time frame chart, guys, right now I would not see any clear patterns for trading, but on the common week probably we need to look for this area. As you can see, that's former lows. That also will be here lows again, and that will be also, guys, the weekly pivot point. So if market will return right back down below these lows, that will confirm that probably the bearish sentiment right now is still valid. It is stronger, and that will confirm that the recent rallies were just the closing of the shorts. because market should not move below these lows if this is not just a short closing, if this is really real purchases. But moving below it, it probably will suggest that the market is ready for the downward action. That will in fact will complete the current retracement that has happened here. So that's our trading plan, what we will be watching for on the coming week. So the conclusion is as follows. We could return to discussion of the long positions and the long sentiment only if market will move above these tops. If market will break below these lows, this probably will give us more confidence, more confirmation that the bearish sentiment is still valid, and the market probably will reestablish the move to the downside.